Option volume in 2025 has soared. Today, in the workshop, Jay and I will have a look at what's driving this record growth after the bell. Oh, yeah.
Alex, I got to tell you something.
Yeah.
You would have been an awful cowboy. You would have hated being a cowboy.
I think you're right. I would have hated it. You're right. I like being out in the open, in the wild, in the mountains. I'm not sure I'm a horse guy.
You could be a hiker. It's the horse, no wine, no people. You're a people person.
No people.
There's no people. Can't talk to cows.
Can't talk to cows. No good. All right. I'm with you on that. I just kind of a dream.
Yeah.
All right. Today, no Mark today. Not sure what he's doing, but he's not here. We are going to chat about option volume in 2025. So let me just put it in a little perspective before we get going. In 2024, it was a record year. And off the top of my head, this is from memory now. The system-wide for the entire year, they did about 10.38 billion contracts for the entire year. Monthly average was around 46 million contracts per month. That's all products, ETFs, indices, equities, system-wide. What do you think it is this year? You probably know. Are you frozen? You're frozen. You're like the Yeti in the freaking. What the heck? What's with your frozen?
Sorry, that was my fault. That was my internet.
Oh yeah, good internet. You look like the furry mammal.
Actually, I'm getting a new internet.
This week, thanks God. Yeah, you're going from dial-up modem to something modern. That's good. So yeah, I don't know if you've heard what I said, but 2024, 10.38 billion contracts. I'm not going to tell you what it's marching for this year, but average daily volume daily volume. 46 million. That's from memory a little bit. This year,
actually, I have the stats right in front of me.
Go.
All right. So the total, including futures, equity, and non-equity.
We don't care about futures. We don't care about futures. We only care about options. Not options.
All right. So then,
just listed OCC options.
Okay. So then we're looking at about 12,227 million options traded in 2024.
To date.
In 2024. So
yes, sorry. I thought it was more like 10 billion. Sorry. I thought it was
2025. We've already exceeded 2024, and that does not include obviously the last month and a half.
Correct. So I'm at roughly, well, not roughly, I'm exactly year to date from OCC stats, 13.1 billion. Last year was 12 point something billion. So we're beyond it this year. Phenomenal growth. Average daily volume last year, 46 million. This year, 60.7 million contracts per day. Okay. So I guess, just qualitatively, what do you think's going on here? What's caused this explosion in growth? I mean, golly, when OCC and SIBO started 100 years ago, they were hoping to get 10,000 contracts in a month. Now, clearly, this is one of the greatest success stories of all time. What's causing this? Do you think? Is it? You have any ideas?
Well, first, the thing I look at is which options are actually exploding. Is it equity options? Is it index options? Is it futures options? I know you'd hate them, but they exist. Which ones are actually exploding? And the thing that pops out is it's mostly equity options. There is SPX explosion since COVID, but for the past several months, it's been equity options that have increased quite a bit. The reason why I suggested this as a topic is because we're undergoing a further explosion starting around like the 9-10, 9-11 time frame. The average equity options that were traded were about 50 million, and then on 9-10 it was 61 million, and we've only had 3 days under that number. 61 million. So now the average has gone up from 50 to about 61, 62 million in the past like month. And so, and it's not in equity options, index options and futures options have remained steady. So there is a lot more equity traffic. And what we've noticed in Volland is that a lot of people are buying options. So this is a buying spree, and it's mostly small trades. So it's mostly, which implies that it is retail traders who are now strongly trading equity options. You might ask the question, what happened on September 10th? Or, and that's kind of my question. What happened on September 10th that caused the next leg up in option volume?
Was that tariff time? I can't remember off the top of my head.
Well, the big tariff time was April.
And then, that far ago? Not really. Was that far ago?
And then we had the Trump anti-China tweet that caused the market to drop 2.7%. And on that day, which is October 10th, we saw 101 million options traded only in equities. So like that day was that brought the average up quite a bit. On October 3rd, it was 81 million options. So it seems like what is happening, and again, these are all mostly smaller trades. I mean, index options are staying steady, as are futures. I think retail has gotten the tip that options can be used as insurance. And I think that we're seeing like an explosion of whenever the market comes down, just even a modest amount, people like struggle to protect their gains in their portfolio.
Right. So a couple things. One of the things that this is coming from SIBO, and we're going to show some slides in a second, not quite yet, is that retail, as we know it, has gone from a very small percentage of overall volume to 51% of option volume. That's tremendous. I want to say retail was in the 20s of all volume, 20% of all volume. They're pushing 51, 52% now, which is just insane. It's great. I love it. So more access to the markets, right? Tighter markets, more liquidity. It kind of feeds on itself, right? The more retail players, the tighter the markets can be for the market making community. Easy to access, cheap to play, right? It's been democratized all of a sudden. You can do it for free practically. One other little tidbit that I'm going to throw out, and I'm on my soapbox again, is that I think we're going to get another leg up. And I think PDT, which is pattern day trading, is going to go away for the most part. It's probably still going to be there in a small form. But now all of you folks who have smaller accounts than $25,000 will be able to open and close within the same day without regulation. So to me, that's going to let that $2,000 account, that $5,000 account really perform well. Trade maybe 0 DTEs if that person likes that, and close them that day without trying to figure out a box or something goofy, and just be done with it. That I think will add another leg up in option volume. What do you think?
Absolutely. I think that risk controls, from pattern day trading, like regulatory controls, I think are more harmful to the retail investor than they are helpful. That being said, though, I think we've also noticed SPY options have exploded in volume, just that ticker. And as has the Mag 7. There's also been a growth in, it's not as popular as it was during COVID, but there's been a growth in meme stocks. MicroStrategy, which has been seen as a proxy to Bitcoin. And, as these meme stocks come out, they're increasingly being played by options, not by like actually buying the stock.
Right.
People want that optionality in that name. And Palantir is another one. That's also kind of memed up. And when I say meme stock, to me, that means that skew should be inverted. So whenever that stock goes up, the volatility goes up with it. In a correlation, that's the correlation. It's an opposite correlation. So, and that's like because tons of people buy the calls, and then the market progresses up
Sure.
to follow those calls. So, I think that has been a big deal. Is that now, especially since the GameStop and the AMC, and retail has gotten a little bit wiser as far as the use of options to accelerate gains on smaller capital rather than and now like there's many meme stocks.
Sure. Yeah, I think the other thing that's interesting is that options, at least from my prior days as a market maker, options are great in a chaotic environment. Right? Misprices occur, crazy things happen, people do nutty things, and that's what options are great for. However, one thing I'd say, and I notice it from our business on the retail side, is that in those massive 1.5–2% moves up and down and all around, I tend to see the retail person sit on his or her hands and not play the market because maybe a good part of them are using short iron condors and SPX. Those movements are wiping out, some of their gains, and they say, "Hey, I'll let this settle down. I can't trade this." So we definitely see lower volume on massive movement days, which, the massive movement days have big overall volume, but from the retail side, it seems like it's a little leaner during those times.
I mean, one thing I'll say is and this is like my personal belief. You're talking from a perspective of Tradier statistics, right? And Tradier, I think Tradier brokerage houses a lot more sophisticated option traders than Robinhood or Webull or anything like that. Tradier is more premium sellers, and Robinhood, you can't even sell an option to open.
Okay. That's a good point. I didn't know that actually about them. So,
and Webull too. I think Webull, you can't sell to open. So I think that
Can you sell to open as a spread?
No,
a credit spread?
I don't think so.
Okay.
I mean, I don't have a Robinhood account or Webull account, and maybe somebody can comment and say something, different. But
and if you can't do it, then come over to Tradier after you comment on it.
You know what? I say that a lot. Like I say that to people who say, I have Robinhood. I can't do a condor. I mean, like, why are you with Robinhood? Why are you doing it? If you want to make this a serious deal, then you have to, you're going to have to do something about that. Go to some, and I always suggest Tradier because Tradier is that retail platform that has zero commissions that that uses PFOF that Robinhood does, but you can structure options in a better way than you can on something like Robinhood or Webull or whatever.
That's a plug, right? I'm gonna give the plug a bell. That's a plug.
Yeah, that is a plug. It's actually it's kudos because it's not you saying it, so it's kudos.
Right there, you go.
Brokerage.
Good.
Yeah, so I mean, I think that's another kind of thing that might be skewing your guys' thought patterns.
Yeah, that's possible. Okay, let's do this. Let's have a look at some slides. What do you think?
Okay,
let me explain. I can't do this in the presentation form because I can't figure it out on this stupid computer. It goes into outer space if I play it. So we're gonna have to do it this way. So what you're looking at, this is from the SIBO. Henry Schwartz put this together for our summit and talked about it much better than I'm going to do. But this is their statistics on industry volume. Okay, and we'll go through some of these things. This first is volume by product type. So you might not be able to see this, but the dark line is the dark bar is the index options. And then you've got a green bar that is ETF options. Then you've got single stock options as the blue bar, and that pink line, that kind of line graph, is overall volume combined. Okay. And what I don't get here, Jason, maybe, oh no, I do get it now. I'm looking at group ADV as opposed to market volume on the right. I didn't see the two y-axes. I got it now.
Yeah.
Okay. So if you see in 2024, it looks like about 46, 47 million, as we were saying. It's pushing upwards of 60 on its way. So it is 60 a year to date right now. I don't know why it doesn't show that on here. But look at single stock volume, as you said. Look, it's pretty explosive relative to the past years. Do you see that?
Yeah.
That's the blue bar. Look at in 2021 during COVID, the height of COVID, that spike, right? And it stayed pretty high above the other products. Any thoughts on this guy?
Well, yeah, I mean, that is the meme stocks, right? Like that's for me, that's AMC, and retail, I think, got a little bit smarter in trying to, I don't want to say memify, I don't even think that's a word, but got a little smarter in finding stocks with high short interest to try to get a squeeze. I think, and because of that, and it's probably institutional too. Institutions probably, with a little bit more weight to throw around, can figure out how to squeeze people out of their short positions. And so I think it's more of a meme stock thing. And, we've noticed kind of similar in our statistics that there are now more meme stocks that, people maybe not considering as meme stocks, like MicroStrategy, MSTR, and Palantir. But they are exploding to the upside in volume. And then the other thing too to note is in 2022, you saw a huge jump in ETF volume. Yeah. And that I think is where SPY and QQQ, and it's pretty much those two. There's a little bit more in like TLT, people trying to play bonds. Right. But it's mostly those two, is the State Street and Spiders.
Right. Good. Okay. Next slide.
Shares is QQQ. Yep.
Next slide. Volume based on time to expiry. This is interesting, right? So the green bars in the upper graphs, the green bars there are within 1 week. So the 1 week down to 0 DTE. Okay, that's what the green bar represents. And the blue ones are greater than 1 week. So as you can see, back in 2018, the greater than 1 weeks dominated for the most part. And then it continued in that path. And all of a sudden around COVID time, we started equalizing each other until we got to 2022. Now look what happens in 23, 24, and really 25. Those expiries less than a week have just exploded. And we know that from SPX 0 DTE, that number is gigantic. It really has swung the other way. So a lot more interest among the players in that 1 week and less. Go ahead.
Well, if you go back to the last slide, you'll see that the explosion in ETFs and indexes really have been started in 2022. Yep. And that's when 0 DTE really kicked in. I mean, if you go look at the next slide, because before that, 2018, it wasn't all 0 DTE yet. You still had Monday, Wednesday, Friday, right?
That's right. Yeah, exactly.
So that's probably what happened is, everybody felt comfortable trading on Tuesdays and Thursdays.
Right. And don't forget this growth here. This growth here, which I think is going to continue to rise in 2025. All of a sudden, we saw a whole infusion of bots and automation and AI, whatever, that whole stack started happening in 2025 in a big way. It was there in 2024, but just getting its feet wet, a little nascent. Now it's like going crazy. Everyone I talk to in our business is doing a bot or something automated, right? Mm-hmm. And that's going to drive business as well, I think. Right, even more business. So these are interesting. You can see down below in the little graphs, it's option ADV, average daily volume by index is the left one. Middle one's ETF, and the right one is single stock. And you can see the green ones, again, less than 1 week, and you see where that growth is. So single stock, not as much as ETF and index in 2025. You see those green bars popping up?
Yeah, but I think a lot of that is opportunity because,
well, it's also, they might not list 0 DTs in single stocks. They might have a weekly, but it's more prominent in the others.
Right. So you have 5 times more opportunity to do under a week expiration in the index and the ETFs than you do in single stock.
Right. Got it. Okay. 0 DTE options here. So this is 0 DTE versus zero DTE. So the blue one is the average of non-zero DTE volume, okay, over the years. And then the green one is average of 0 DTE volumes, right? So you can see how those crossed away out here in 2024, the latter part of 2024, heading higher. And then they do an SPX version beneath it, right?
You also see that spike in 2025 too.
Yeah,
in
you do.
Non-zero DTE.
Yep. The graph below is average trade size. Now that's stayed pretty consistent, I think. One note that I talked to Henry about when I was in at the SIBO in the SPX pit is that 95+% of all trades in 0 DTEs occur electronically. So it's not an open outcry mechanism. Henry's turned to me and goes, that means there's a lot of retail people playing in their very small lots typically. And we've seen retails there.
Yeah, we've seen this trend too. And I don't think it has been very consistent. I mean, you look at in 2022, the non-zero DTE went from 11 down to 8.25. I mean, that's a reduction of almost 30%. And same thing here in the green. The green is looking at like about 4.5, and it's going down to 2.75. That's almost a 50% decline in average. You can't get less than 0. So
right. And that's the 0 DTE line too. Yeah. So this is all the one lotters coming into play, right? The retail one lotters. Yeah.
And good. So I think that points to a lot more retail people getting comfortable with options.
Yep. I agree with that. And last, this is from OCC. I don't know if you can see it. It's OCC volume stats. The salient one, most interesting probably is year-to-date average over here on the far right, 60.785 million. And I had these things pulled up. I didn't copy the stats. OCC totals are on the far right. So NOV totals, NOV average. Year-to-date totals, that's that $13 billion number that you were talking about. And then 60.785 per day. That is crazy.
When was the summit?
It was last week. It was a week ago.
So since then, we've had 5 days, I guess you could say, and it's been 68 million, 78 million. Yeah. And then this week has been lower, 56, 49, and 55. So I think that average got brought up.
No, it's and don't forget we're going into the holidays. So Thanksgiving week's a burner week. You got a day off and a half day. Then you get into the Christmas.
Yeah, but if this is true that it's retail, you're gonna have dad sitting at home on his phone on Robinhood going bing 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 bing, yay, you just bought 5 options, right? Like you're gonna that's where the trading is happening. I mean, so I don't think that holidays mean anything much anymore.
Yeah, that's probably fair, especially for the retail person. I mean, I trade from my computer in my office, and it's not like I don't care what day it is. If I'm sitting in front of it, I'll probably throw something on, and if I'm out playing golf, it's a little harder. So you never know.
Yeah, but if you're you and I are treating it like a business, right? Like more or less. I mean, we're trading, trying to, structure ourselves and make money. There's plenty of retail out there that sees this as sports gambling, just like, I think it's going to go up,
Wait till you get event contracts, even better.
Oh man,
that's coming too.
We're getting that in IBKR, right? We have that.
Yeah. It's coming to us too. Coming to Tradier too. All right. We got to go. Yep. It's coming. Right. Give us your plug for your whole stack so we can get people to come over and visit you.
Sure. Well, now with www.vol.land, Volland is has reopened our tiers, and
Good.
we are. I think we're maybe like 1 or 2 widgets short of completely recovering from Volun 1. So this is our second iteration, and it's going to be better than it was before. We also are Ad Deum Funds, which is an RIA specializing in controlling your risk using options. And we also have Kyrios, our hedge fund, as well.
Awesome. Good. Don't forget to sign up to the hub. More great things always coming. Hub.tradier.com. Probably a trading contest in the future. We are talking about a live summit, maybe in the Southern Hemisphere, where it's warm in sometime around May of next year.
Hemisphere.
Yeah,
moving further and further south.
Southern part of the U.S. I shouldn't have said Southern Hemisphere. Southern part of the U.S., which isn't the Southern Hemisphere. Now I think about it.
We're going to like Trinidad.
We're going to Trinidad. Yeah, look for that. But the way you can get it is you can sign up for hub.tradier.com. It's free. You get all kinds of information, plus our free newsletter. What else? And if you need to open an account, go visit Tradier.com. It's very easy to do, and I highly recommend it. Otherwise, I'm Lex at Tradier.com. This is Jason, and you guys have a great day and happy trading. All right, man. Have a good weekend.
Later.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.